stock market today analysis for Monday, December 5th, 2022. We got the Nasdaq down 1.93%, S&P 500 down 1.79%, U.S. Treasury 10-year yield up 10.7 basis points, gold down 1.62%, Bitcoin down 0.93%, and oil down 3.30%. This up, down through these percentage numbers is why I love looking at these pictures instead. It makes it so much easier to put it into perspective. If you just see up a certain percentage or down a certain percentage, what is that in relationship to? That's why I really love the charts. What's causing all this downward movement? We study markets. What do they have to say about it? If you thought you were having a bad Monday, and I know this is not directed at me because I don't have bad days. If someone thought they were having a bad Monday, Wall Street might have them beat. What terrible thing could have happened to send stocks tumbling, you ask? In our topsy-turvy world, strong economic news is actually bad for stocks. The November Institute of Supply Management, ISM, Services Index beat consensus expectations and showed that economic activity expanded from October. This fuels investors' fears that the Fed will be forced to keep rates elevated for longer to smother the demand and return inflation to its 2% annual targets. Yeah, that's what seems to be accurate from what I've been seeing over the last 10 years or so, is that all that really matters for the stock market is what's the Fed doing with these rates. When it really boils down to it, and the stock market is actually disconnected from the rest of the economy. So here that I think they're hitting the nail on the head. Strong economic news, which would be good for you and I individually, is bad for stocks. Investors' fears that the Fed will be forced to keep rates elevated. Well, and then there's a whole other tangent someone can go off in with the whole smothering inflation and smothering demand. However, this channel is not about going down those rabbit holes. This channel is about ideally beginning your option journey or your stock market journey by selling cash secured put options on a stock that you don't mind owning. And if that's something you might be interested in, there's going to be a link to a playlist right here and get you started with that ball rolling. Speaking of ball rolling, let's look at, were there any rolling balls for this earnings today? Yes, there was. And we got more earnings coming out. Well, that's already on tomorrow. Here was today. Tomorrow for me. maybe today for thee. So earnings, big one. Costco's probably going to be one people are paying attention to. Is this GameStop on whatever day that is? Wednesday? Possibly. I'm not so much of a meme stock trader myself, but if you are, if you aren't, whatever you need to do to be on top of what you need to be doing for stocks reporting, then use something to do that. Let's check out the VIX. VIX, where are you? I gotta pull it up this way. There we go. VIX closed the day at 20.75. Now, changing it up a little bit on you, this is an hourly chart showing the last 5 days. So each one of these candles represents 1 hour of time. Here's where Monday started. Sunday is trading a little bit. But so the VIX jumped up just a little bit. We see last Friday ended down here, pretty low, right around that 19-ish area. And it gapped up today, but sold off to close. And you can see in the last, for the last, like, what is that, 3 days, 4 days, or 2 or 3 days, it's kind of been in this range from about, let's say 21 to about, say 21 to 20. And a couple days before that, we see, look at that, just kind of going sideways here until it dropped. Now, when the VIX is dropping, that means stocks are generally going up. This means fear in the market is going down. Fear being calculated by people buying insurance on the SPX, buying puts. So it dropped since that. What day was this? Wednesday. Since Wednesday, dropped down. Thursday kind of went sideways down a little bit. Must have been Friday here. Dropped down even lower today, kind of gapping up. So we're still sort of in this range. And you may or may not know that I put a variety of paper trades on using this VIX strategy, which is basically when the VIX is now we're looking at a daily chart, 6 months. When the VIX is up here in some sort of higher zone, how high? I guess you'll have to find that video where I talked about selling options with the VIX. And fortunately, I just can't link to all these things at one time. But find that video in the playlist, and it'll go over everything. But when you're up here, you're selling put options. And as the VIX drops down, that means stock market's going up, and then you start selling call options. As the VIX starts going up, vice versa. And of course, you're closing them out in relationship to the VIX going up and down, and yada yada, that type of stuff. So you see, in relation to the last 6 months, the VIX is low. We're down here, hitting that low again. So I sold those. I sold those put options, call options. And slowly making some gains back, and I'm leaving this on kind of extra long. I'm taking a class Tuesday nights, and that class, Honolulu option traders, aka HOT. I learned the strategy over there, so tomorrow I'll have that class again. And no matter what state you live in, you can actually attend that. Check it out on Meetup. And we got a guy taking this class with me right now from Florida. But so nonetheless, leaving it on. We'll see. We'll talk to them. Talk to the instructor tomorrow. Maybe I'll leave it on longer just to see what happens. But Apple right now is up by 250 bucks. These are all long. Most of them are all long-term calls. So most of them are expiring around January 2025. Some of them I brought in a good amount of money. This is 2160 times 100. Right, so I brought in a decent amount of money for that. So I've got time. If it's I got time for this this to make its way up. Yeah, at least come up here 24. Maybe touch that 200-day moving average. If it can get all the way up here, I'll tell you what, I'll be happy camper. I'll be buying some more stocks, some discounted prices. But I digress. Nonetheless, let's get back to this specific volatility trade. Amazon up 47.50. Citibank up 77.5. Coinbase, which actually I just straight up bought a put option on it, and it is not this volatility trade. Even though it's not this volatility trade, it's down. My put option position is down a little over 200 bucks. This one is also not a volatility trade. This is a paper trade that I put on, talking about the beauty of selling cash secured put options on stocks that you don't mind owning, and potentially owning the rest of your life if you had to. And you can also find that video in my playlist, one of these playlists somewhere. That one's under the playlist probably of cash secured put option playlist. But that's real beautiful because see all these other trades, come expiration date, generally speaking, I'm either going to lose money or make money. But with this one, for this particular strategy, selling a cash secured put option on a stock that I don't mind owning the rest of my life, and maybe I want to own the rest of my life, come expiration date, doesn't matter what happens. It expires worthless, I keep the premium and resell the option. I get assigned, I keep the premium, and now I own the stock, and I can debate what I want to do going forward from there. So check out that one too. I think this is the best way to get started in trading, because ultimately maybe there's some jargon terms, maybe it seems like there's a couple moving parts to it, but other than that, it's easy. In my opinion, it's easy compared to anything else. If you want to any other type of trading, I think this is way easier, because it gives you the least, it makes it the most difficult to lose money from my lifestyle. And I think that if you check it out for yourself, you might come up to that conclusion yourself. Intel up by $1. Microsoft down by $67.50. Netflix down almost 1,000, $727.50. Nvidia down 85. SoFi down 50 cents. Okay, SPX up by 180. This one is a little different too, because most of these other ones for the volatility trade, I just sold the call option. This I sold a credit spread. So that one is up. Although it was more profitable later. I got a variety of things going on SPY. SPY I do a lot of testing on, and good old crude oil, just because I don't know, you know, S&P 500, it's very, very liquid, and if there was only one thing I could trade ever for the rest of my life, it would probably be crude oil. The second would probably be here, but this one, you got to be a master. Maybe, I think in order to make good money, you really have to be pretty proficient at this. Otherwise, if you're not very proficient on crude oil futures, you're probably going to lose money more than make money. At least there's ways to do defined risks and things like this. I guess you can do it in here, but overall, when you're dealing with futures, you're just kind of dealing with a different animal, where your margin changes so much more rapidly. So that, and shorted one share, which is negative 31.75 at the moment, shorted that a while ago. And Tesla is down by 132.50. MMRI, looks like it poked up just a little bit today, but overall we're in the kind of mid, starting to go into the lower part of the high range of risk. At least we're not knocking on the door of 300 anymore. We'll see how things unfold after the holidays are done. But I kind of like my old way of not so much because of the graph, because it was showing the days and what the number was at where it closed, and for some reason that worked better for me. I know I don't like it here, but oh, maybe if this was a candlestick chart or something, I don't know. I guess it's got a way of kind of trying to filter it out, but nonetheless, you know, whatever. It's working pretty well. That's for one day. So risk went up just a little bit, but look, we're in the high range of risk still, if you're looking at this indicator. So to me, you know, 240, 270, high range is the high range. We're not down here at 75. So let's keep our eyes on that. This 13-week treasury still clinging. It's slowly moving down from that 52-week high range. It used to be that all four of these were just stuck, pushed all to the top of this. And this is what a lot of money flowing in or out of the stock market. Seems like as these rates start going down, it seems like the stock market tends to do better. And when these rates go up, it seems like the stock market doesn't necessarily do as well. So it's something to pay attention to, and it might give you a bigger indication past the stock market. Have you heard of something called the yield curve inversion? I think they're normally looking at like the 10-year and the 30-year. Right now, it wouldn't the 10-year and the 30-year wouldn't be inverted. But the 13-week and everything else is, right? And what this, oh, here, right here, we got a 5-year. Basically, when you have the shorter term treasury, which is basically the government borrowing money. So generally speaking, the shorter time you lend the money for, the less risk there is. So if that's true, why would you get paid the most for the shortest amount of time? And I guess, you know, in this macro sense, it shows that there's some sort of problem. And generally speaking, I guess these yield curve inversions tend to predict a recession. To me, that's a no dookie Sherlock. Like, I already, to me personally, I'm already operating under the fact, in my own definition of recession. Not meaning that I'm having a bad time in life, meaning that I'm not thinking there's a recession coming in the future. I'm thinking we're in one right at the moment. And just because someone puts on a fancy suit and gets elected into office and then all of a sudden decides they want to change the definitions that have been around for whatever 100 years or 50 years, to me that doesn't change it. It might for you, maybe a fancy suit and fresh haircut, maybe that is all that's needed in order to get you to believe something. But your good buddy Brent, nah, that's not enough. I have my own fancy suit and I can get a fresh haircut and look in the mirror and talk to myself. Now we're going to change things up. So we'll be using the charts off here a little more, with the exception of Bitcoin. I can only find the Bitcoin futures on there. But we're going to take a wider look at some of these and why am I doing this? I'm doing this for a couple of reasons, and they ultimately, all reasons lead to I'm trying to look for the most efficient way to look at these markets every day. If you take a look at what's the mission of I Have Success, to help you begin your trading journey by learning how to sell cash secured put options to more advanced strategies in a way that allows myself to grow and improve in the process. You know, so that's a win-win situation where I'm growing and improving, I'm becoming a better trader. And part of, so through the process of doing this, I realized like I can probably bring more to the table for myself and for you by switching these charts up a little bit. So exactly how it's going to unfold, I'm not 100% sure. I'm definitely a bit of a creature of habit, and I like structure that allows me to, even if there's not the structure, I end up making a structure. But when there's structure made, it allows to go further faster, because there's certain things you don't have to think about. If you constantly have to rethink what you're going to do in a certain situation, what am I going to do today? What am I going to do today? What am I going to do today? But if you tend to have a structured week, then you don't have to think about what you're going to do. You can just really focus on getting it done well. So in the process of thinking about things that way, I decided to change things up for us. There were some other factors in it that I'm not going to go into, but we're still going to be looking at this Pro 2 chart from philsgang.com. I really like it because of the well, for 3 reasons, and here these 3 reasons are. These stochastics, they're really on point. If I could figure out exactly how they have these set up, maybe I wouldn't use this. Maybe I wouldn't pay for it. But at this moment I haven't, so I'm willing to pay for it. And even if I could figure out how these stochastics were set up, and I set them up over on a different brokerage, I might still pay for it just for this. You see, it's 3 different colors. It's set up in a way that it's monitoring money flow. And your normal chart is going to be green if it closed higher than it opened, and red if it closed lower than it opened. But with this Pro 2 chart, it's green because a certain amount of money is actually flowing into the stock. Money from where? money from hedge funds, pension funds, investment banking companies. It's not so much like you, me, mom, pops, grandpa type of money. It's big private offices, big amounts of money flowing in, or big amounts of money flowing out, or somewhere in the middle. We could actually turn that off if we wanted to, but kind of debating if I like it on or I like it off. And this kind of tells you, it's like a yellow light when you're driving. So if you were going short here, all red, this tells you, hey, you might want to, money is, there's not as much money flowing out. Some money is starting to flow in, but not enough to turn it green. And sometimes it turns green for one day or whatever. So there, it's basically an indicator. Use them with everything else, but it seems pretty accurate, and I really like the way that they have these. This is daily. This is a daily stochastic. So I guess it's a little slower on the daily side though, and this one is a very slow one. So they're actually calling it a weekly, showing you a bigger trend. Now sometimes we see a good big uptrend like this, but the stock isn't necessarily looking like this. Also, obviously, let me stretch out that time frame. Looks like it's going more sideways. Maybe that would be better. We can look at it this way. 1 year. What's going to be the best look for us? And we'll stick with 1 year. Try that out for a little while. Yeah, I think that's pretty good. So, anyways, so we'll stick with that. So let's get on with this. Let's get on with this show. And the other thing I'm going to do is, these different. If you haven't watched any of these daily stock market today videos, S&P 500 is made up of different sectors. On the weekly chart review, we'll go over those different sectors. But so it's made up of these different sectors, and here's 5 of like the highest weighting sectors of the S&P 500. Usually we start with the S&P 500 first, but I'm going to go with the S&P 500 last, because these are making up the S&P 500. So when we get down to the S&P 500 here, have an idea, try to predict what will happen in the future. Don't worry about it. I got a crystal ball here. I know you can't see it, but I do have one. And at 7:13 p.m. Hawaiian Standard Time, it's dark out, and really don't have any lighting on, and so I can't turn that on and show you right at the moment. Nonetheless, you can trust me. I do have a crystal ball here. I look into and try to predict the future of what the stock market is going to do. All right. Anyways, enough flapping my lips and talking about this. XLK. XLK is technology sector. And we got this. It's under the 200-day moving average, above that 50-day moving average. We see sold off today. Volume's a little bit lower than that average volume. And yesterday it opened here, closed here. Today it opened here, closed here, traded all the way up here. Now we're still, we're kind of still in the top part of hold on. Whenever I first start trading a new stock or looking at a stock, what I personally like to do is take a look at a monthly chart. So this is each candle is 1 month going back 10 years. XLY, or excuse me, XLK. Just take a quick look. Okay, we see it's been in this downtrend. It was in the strong up market, but lately it's been going down. With this, we're in a new month, right? So, but last month, this is how November looked. Traded all the way down here, closed out at the top, and right now we're in the red, but right at the top of that. Maybe see how it stopped right here and it opened right here. Look to the left. Do we see anything? More down here, right? We see these prices overlapping down there, which is kind of right in here. So, all right. So, got a general idea of what's been going on monthly. Then I'd like to take a look at the weekly chart. So this is each candle is 1 week. It's looking at 3 years of of history, and we're on Monday, right? Just started this candle. So for the last about 1, 2, 3, 4, 5, 6, 7, 8. Okay, so roughly maybe around 2 months, you know, right here, I guess it bottomed out about 2 months ago, kind of been moving up. You can see prices overlapping here. Looks like we got a little bit of potentially hitting some, maybe hitting some resistance right in here. Keep looking to the left before we see prices kind of got stagnant and overlapped there, and right below that, or pretty close to being below that, we see it kind of get tied up right in here. So looking at the daily, going back 6 months, we see that 200-day moving average on the decline, 50-day moving average on the decline, but it's been an up and down decline. And the daily, we see Monday starting off this week selling off. So here's this big candle, and basically we kind of been trading in this range. It got up to right around here, tested that 135, poked out above it, but boom, we're falling below it. So maybe it's going to float its way or zoom its way back down to 130. We will see. And looking over here at this would give us a better indication. On the weekly trend, it's been up. We got enough money flowing into it that it's green, and this daily stochastic, it's showing that it's up. So it has been on the it's been moving up. So maybe what will happen too is right in here it'll catch some support right in this area. So we'll take a look at that. But as far as over the last whatever number of days this is right here, it's in this little section of a range here, right? This part it was going up, dropped down, started going up, and then once it kind of crossed this 50-day moving average and got up here to this 130, right? Seemed like 130 was acting like a line in the sand, support or resistance, depending on which side the stock price is on it. But it seems like once it got over that 130, now it's just kind of been trending sideways through that 130 to about 135. So as far as how would that affect the S&P 500, well, this sector makes up about 24-ish, something like that, 24. I think it's around 24% of the S&P 500. So that's influencing the S&P 500 to move sideways. Healthcare. Healthcare has really been in a strong uptrend for a while. And even though it sold off a little bit today, we had this big bull candle here. Prices are testing this bottom of this candle, but it's still, as far as this big gain right there, it's not even breaking that halfway point, which seems like, looking at these two candles, it seems like there might be a little bit of support right there for it to stay in the top. If it gets down to this 50% of this body of this candle, seems like maybe it'll catch some support here, helping it to stay on the upside. Also looks like, is there going to be some potential support starting at the 138? Prices traded right down to there, but rallied up a little bit from that, above the 50, above the 200-day moving average. We see that 50 starting to curl up and go through that. This 200-day is a long-term trend, and 50 days is kind of a moderate term trend. And I took off the 20-day, 25-day, just to kind of make things more clean. Challenged myself at just looking at the candles and have these two moving averages, and that is it. So let's look at this guy. Money's still flowing in. We got our weekly trend has been moving up. Generally speaking, once you start getting above or below these red lines here, you want to be careful that it might start reversing down in this trend. And keep in mind, these stochastics, these are lagging indicators. So price moves first, and these are determined based on the prices. So, but it does show you a trend, right? Shows you what the trend has been going on. And like I said, this one is for money flow. So we're in this, potentially could be showing some overbought. Maybe we'll have a bit of a pullback more. Wouldn't be surprised if we see something like this. Doesn't mean it's got to go all the way down, but you see sometimes it'll go down, and just like here, it went down and went back up. So we'll be watching for that. But overall, this, let's see, we had a bit of a pivot here, and I would say it's still, this particular stock's probably still in an uptrend. I think prices got to pull back, potentially got to pull back to around this and break through that before I would really be assuming. Right now when I'm seeing this, it's making me think that we potentially just have more to the upside. Especially look down here at the volume, we see way more. You see, just like taking a look through here, way more green than red. And I don't just mean number of those bars, but look at pushing, touching here, way pushing through that. Lots of volume, right? And then the selling volume has been low when you see it's not even kind of getting close. No, okay, these green bars, volume bars here, it's not getting close in that, but nonetheless, it's still more buying. So I guess right in here, pushing those up. So this is going to be pushing the S&P 500 up. Financials sold off quite a bit. You know, I don't know if it stands out to you, but I see this sideways trend right here. Same thing with as far as the technology stocks. Granted, it's a little bit wider. It's not like tight to 36 and 35, but you know, bit of the sideways trend going on, even though it was in a bit of a uptrend before that. And let's see. Here we have a potential, got a pivot point right here, and here was another pivot point right here. So it broke, as far as the uptrend, price action to, when was it, last Monday? We'll count Friday, it closed right here. It's like right on that. This one, see where prices were going up, and then they turn around and start coming down. It's like a little pivot area right there, and prices broke below that, you know, indicating violating that potential support line or whatever it is, that pivot point. And now let's see what's going to happen at this pivot point. Maybe price is going to start kind of moving back up. And taking a look just for the last 3 days, obviously we got a pretty big increase in selling volume. You know, even on this candle right here, it went up, but I guess there was more sellers than buyers, so I have to figure out what's up with that. Let's take a look at trend has been up, money's flowing in, and that daily stochastic kind of pushing up, but potentially could be kind of rolling over. I don't know. I definitely wouldn't be surprised if it ends up testing these this 200-day moving average. But let's see if it breaks. What is that? It's the low of that day. 34.76. See tomorrow how close it gets to 34.76. XLY, consumer discretionary. See, we got a pullback today. Tried to break out of that 50-day moving average and failed. So this one is putting, you know, as far as putting pressure on the S&P 500, this is putting pressure to the downside on the S&P 500. XLF, I would say maybe up to sideways a bit. This is, and we got some. We see going back here, prices kind of get caught in here, so it's no surprise they're getting caught in here again. We got this low down here where it broke that broke that area. But sometimes it's like not this exact dollar amount. And I think most of the time it's not this exact dollar amount. It's like a range in this dollar amount. But on a on a stock that's anywhere from 100 to 200 bucks is a $3 is a $4 movement, a big percentage, right? As far as this violating this this area right here, going down to 130, 131. Not sure, but what I am seeing here is, okay, we got a, looks like we might have a potential pivot here. I wouldn't be surprised if prices go down a little more tomorrow. We really want to see, like, probably, I wouldn't be surprised if we end up catching some support right in here, just because it's, it's been happening quite a bit. But if it starts breaking, breaking through here with ultimately our 135, that's really what this 135-ish area, 135, probably breaks 130, then see something to the downside. So that's definitely putting pressure on S&P 500 to the downside. Did we look at the, I might have looked at the wrong stock on, yeah, that's why I'm thinking about just keeping everything on one chart. So money's flowing out. Look at that daily. It's been moving up. I pay for this because I definitely use it, and I have in the past. Like I said, I really like these stochastics, but man, making these videos sometimes it's easier just to like go through the list and cover everything. All right, let's do that. All right, turning yellow, so maybe money's gonna start flowing in. At the moment, definitely money, short-term money is flowing out. What is this? XLY. So let's take a look at industrials. Industrials been on a pretty good run since down here, above both the 50 and the 200-day moving average. See, we got a pivot kind of right in this area. I don't know if you call that, if that's kind of ends up, I don't know if that's enough to be a pivot. But right here, we definitely have a bit of this pivot going on right here. And maybe, depending on what happens tomorrow, this might end up being another a pivot high. But it's kind of, here's our first little indication. It broke through this today. Here it seems to get kind of stuck in this range here, so we'll see tomorrow how close it's going to get. If it starts breaking down into these, how far is it going to break down into 100 bucks, or is it going to go back the other way? But overall, this is helping the S&P 500 go to the upside. So what does that one look like? Look at that, green, boom, been going up. Sounds great. Knock this out of the way real quick. And you see that going on? I think this is just too much for those flipping for this type of video. I'm gonna stick with these. And what we got going on? XLI, we looked at that. Let's look at the S&P 500. So not surprising, right? Because we got stocks moving sideways. We got a lot of stocks under pressure moving down right now that are making up the S&P 500, and we got some of them moving up. So we do have this trend of moving up. We also got sometimes it's going sideways. Right now it's kind of pulling back, and it's fallen back into this sideways type of trend. So it's kind of like we got the sideways up grind going on. Way more selling than buying happening lately, as far as just comparing green to red. So what might we be looking at for tomorrow? Weekly chart. We'll see. Yeah, what that is always the question, right? And that is why I love selling options more than picking direction, because in tonight And not looking at the futures, not looking at anything else, just looking at trying to figure out, looking at these different charts. Hey, we could see a rally come in. I think it's going to be pretty important to see what happens tomorrow. You know, regardless of whatever it is, I think it's going to be pretty telling. Is it gonna be testing down here, because we broke out of this big bull candle here. We're broke that 50%. We're trading, starting to move into the bottom 50%, which brings us back into this range right here. 200-day moving average. We broke above the 200-day moving average, and at the moment it's failing. So if it keeps failing, then basically it's a good indication that we potentially going to see more pressure to the downside, right, if it's not able to stay above that 200-day moving average. But it might be able to later on. IWM, see the same thing. IWM, it's been in this uptrend, but it's been a pretty volatile uptrend, and that one is given back all, basically closed today where it opened back here on this big bull candle. That's why these percentages, right, at the beginning, like the S&P 5 or whatever, IWM up 5 points, IWM down 5 points. What does it matter? You gotta look at relationship to something else to really make something of it. So we seem to be in this range right in here that's moving up and down through this range, struggling right on that 200-day moving average. But you know, look at that, we do have the 50-day moving average slowly moving up into it. Qs looking pretty similar into this sideways range right here, pulling back. We'll see, is it going to stay on the top part of that candle? The dollar, boom, look at the dollar down there. Fell, broke this range again, fell, testing that 200-day moving average. If it starts dropping through this, then probably the price of this is going to be moving up. We got some buying volume, people buying right on the right on that 200-day moving average, and bonds. So bonds have been moving up. Generally speaking, what's been happening for a while is this TLT down, stock market down, TLT up, stock market up. I don't know if it's working exactly day to day. Maybe looking at a weekly chart might give us a little bit better of an idea. But we see, yeah, over the last like 2 months, it has been moving up. So this candle, this doesn't really tell us much because it's only 1 out of 5 days, right? 1 out of 5 days trading, with last week being a lot of movement to the upside. I did notice this turn green, right? Switch from that enough money flowed in to turn green. The creator of this usually says like on the 3rd day of green. You can kind of trade it different ways that you want. I don't particularly trade TLT, although probably around oh, there we go, got a 2nd day just popping in. Probably sometime around, I think 2012, I remember Porter Stansberry from Stansberry Research talking about the TLT, short TLT. I don't remember what price it was at. I just remember that's how I first heard about TLT back then. And I don't think that it like in the next 6 months it really went down though. But you know, I guess if he was predicting 10 years into the future, yeah, about 10 years it went down. This trend is moving up on it, and some money flowing into that. Oil, man, oil took a bit of a tank there. Let's see if I can get rid of this. I'll go like this. I'll get that out of there. There we go. So oil, we see floating back down. Let's see what happened over the last couple days. Went up here testing the $80 are we on the testing the 80? Really sold off quite a bit, which actually is why this is zero here. That trade closed out with oil doing what it did there. And so we're down here testing this 70 area here. And 200-day moving average kind of going sideways. The 50-day moving average slowly sloping down. And we're testing, we're testing the mid 70s right at the moment. And I'm having fun with oil. I don't know why I thought it was going to get back up into these 85 to 90 range, but obviously I was wrong with that. It's down here more of this 75 to 80 range. We'll see what happens with it going forward. Gold. So gold went up, pulled back. So we got a pivot here. We got a pivot here, and right now, maybe this is minor support. This could be major support. And where am I getting these terms from? Based on the master trader way. I'm definitely. They probably wouldn't even want me saying that because I'm not very good at their trading approach. But I do watch a lot of their YouTube videos that they put out. So I'm hearing those terms, and I like the idea of using less indicators and just using more support resistance based on looking to the left. So check those guys out. I got some other courses. I'm getting ready to re-go through the swing trader course. They're definitely not the cheapest around, but I think they are one of the best, especially when it comes to just the technical trading. If you want something that's also really good, use the Phil's Gang stuff. It's way cheaper than Master Trader. It's going to be way easier, just relying on indicators. They have their own system set up. But basically, if you're following whatever, you just got to check them out. See if you like it. But both of those guys, I learned from both of those companies. I enjoy them. So I'm off. That's not the point. The point is, what's gold doing? Let's see if it's going to use this as a support zone now at this around the 1780 area. Came up, tested this 200-day moving average, broke below it. So let's see how far it's going to break below it, or is it going to stick up to the top? Same thing. We got this 50-day moving average curling up slowly there. But if it breaks this, if it starts going down into here, we have to see what happens down in this area where it pivoted before. So let's see how that goes. Now, this is Bitcoin futures, right? Futures, and what's the future price? Say it's at 16,890, and then this is the actual Bitcoin, and this is at 16,979. So we're gonna have to use this one until I can figure out how to put straight Bitcoin price, not the futures price, on Thinkorswim. We'll be looking at this, and all right, we're looking at a weekly. This is not a. This is the daily market review. This is a weekly chart, 2 years, and we see, weekly. I really, the more I look at charts, the more I like the weekly chart. So I think it just gives you so much more of a bigger and better picture. With that monthly, for whatever reason, Tastyworks doesn't have that much data of going back on Bitcoin, because I think it's definitely should be more than this. But we see what's happening when we're looking at this monthly. Hit a high here, hit a high here, double high, crash down. See this kind of support area here that it went up to before here, had a pivot right here. Well, it started testing that. There was also in this kind of supportish area here. See where prices kind of getting caught up in there, but then drop down. Now we've been kind of going sideways and sideways to the downside. And then you can break it down even more. You see that same thing, but deeper inside, just looking at more details inside of it. And then into the daily. And right now, we keep testing that 17,000. But it's been over the the 20-day moving average for one, well, we'll count closed candles. 1, 2, 3, 4, 5, 6, 7. 7 trading days above the 20-day moving average. However, I personally wouldn't be surprised if we see it fall back below it, as it tends to do that. You see up above and then eventually really falls below. So it'd be interesting to see what happens. Oh, I forgot to look at that line chart. Changing things up. Might have to eliminate this line chart. It's just not going to be fun. So we see we're out of this channel that I have here for the last basically getting right around 12 months that we've been stock market's been in a potentially in a bear market. Now are we in the beginning of getting out of that bear market? We will find out. I wouldn't be surprised if we just end up grinding sideways, which I keep talking about. That wouldn't surprise me. I'm just kind of looking at things, just not thinking about fundamental things, not thinking about political things, not thinking about economical things, just looking at these charts. That seems like the most likely scenario. I think the least likely scenario is that we have this bull rally. I think the least likely scenario is we start seeing this happen again, unless there's some sort of program that's instigated by the Fed, by the Treasury, that ultimately gives the same sort of results of quantitative easing. Operation Twist. Call it anything you want, but it's not QE, but it gives you the same results. You know, whatever goofy gaslighting name they come up with. If it looks like a duck, it quacks like a duck, swims like a duck, eats like a duck, breeds like a duck, but they tell you it's not a duck, well, you can call it whatever name, but in function, it's a duck, right? So if the government and the quasi entities that basically work with the government, whatever you want to call them, if they do something to rig it to the upside, yeah, okay, that's the only way I really see it going up. I don't think they necessarily would want it to crash. Maybe they would. I could see in some situations maybe they would, but I think overall maybe trying to keep it up when it wants to go down. I think if there wasn't any sort of attempts, if it really truly was just a free market, I think it would probably be crash, because who thinks the economy is great when there's talks of nuclear war? Who thinks that? Not in a whole, not many people. You got a fraction of society that thinks nuclear war is great. You got a fraction of society that thinks countries infighting, bickering is great. That's a fraction of people. So, but the reality is that there are these other factors trying to keep it up. And so those trying to keep it up, the fact that it probably, gravity, Mother Nature probably wants it to go down, maybe to kind of move sideways. So I'd be the least surprised about that. My second thing that I would think might happen, or I would be more surprised than it going sideways, but I wouldn't be surprised if it ends up, falls back into this channel, and after the new year, after the holidays, if we see it sort of start testing these lows again. In fact, the guys that run this, one guy's got like 50 years of trading experience. That's exactly what he thinks is going to happen. But you know what the beauty is? You can trade in a way that just doesn't matter. Get yourself a paper trading account. Get that paper trading account. Practice trading in ways that it just doesn't matter what happens, if the prices go up or down. And how might you do that? Try paper trading this. Try selling cash secured put options on stocks that you wouldn't mind owning the rest of your life. Give it a try. What's so wonderful about that is, for example, we got I might just do it this way. H&R Block. This is not financial advice. This is not a suggestion for a stock. I don't know if this is suitable for you. It's just a stock that I personally like myself. But I started trading this stock back in the Corona crash, and I was trading it around 13 bucks. So your situation might be a little different than mine, so just take it as, forget about the name or whatever, the company. You got to find stuff that's relevant in your price range, your life situation, all that stuff. That's why this will help you out a lot. That's why this can help you see the framework that I looked at for those 3 stocks. Put those together and look for some sort of video that's talking about trading stocks in your price range or something like that. And so why do I say that the strategy kind of doesn't matter? Because what ends up happening is we sold this put option at 37. Let's do this. We sold this put option at 37, right? Somewhere probably right in there. And over the last 10 years, H&R Block has kind of been in this range right here of somewhere with, this is a bit of the outlier here with Corona, right? Like I said, I was trading around 13 bucks, but going back 10 years, its low was right around 20, and you got this time where it's peaking out around 38 or whatever in here. And if I buy now at 38 and it crashes back down to here, and I'm buying whatever 200 shares, 100 shares, I don't really care because it gives me a dividend. And I can sell call options on it. Now granted, if I'm selling call options at 40 and it's trading down here in 20s, I got to sell for a long time to make it worth that premium, but it's still an income producing asset for me. That I don't think this company is going out of business. I don't think that taxes are going away. And I think as long as taxes are around, I think H&R Block is going to be around. So I don't care. I don't care what happens if H&R Block goes up, down, or whatever it does, because I'm going to get a dividend and I'm going to collect enough different companies that pay me dividends, and I'm going to be selling option premium off from them, and I'm going to be doing a variety of little trades here or there where it just, yeah, maybe it matters if I'm taking a little position trade, but the big picture is I'm collecting income producing assets that I can squeeze out a little more juice because I'm selling covered call options against them. Sometimes I get filled and I end up making more of a capital gains, and I just repeat the whole process over again. That's like the bread and butter of my strategy, of my portfolio trading. You can learn to do that too. Then there's other things that you can learn, but start with paper trading. Download this stuff, and I'm going to be working on a product right now to help with fine-tuning, picking stocks to sell cash secured put options on. Again, it won't be investment advice. It's not picks for you. It's going to be looking at framework, and you got to find things that are suitable for you. So with that, we're almost hit 1 hour with this video today. So going forward, probably going to eliminate this from these videos. I'm still personally going to be looking at it. I actually use it to help quite a bit in figuring out what I want to do, but trying to give you the best bang for your buck, and I'll keep trying to figure that out. So anyways, you guys have a fantastic day. Bye bye.